My name is Joe Donahue, and I'm a Vice President and Commercial Loan Officer with Northwest Bank and Trust Company. Over the last couple of years, we have certainly experienced many unique challenges, and if there is anything we have learned through that experience, it's that the world is filled with many uncertainties. That remains no different today as we experience geopolitical threats, supply chain issues, labor shortages, historically high inflation rates, and the risk of rising interest rates. However, with the help of Northwest Bank's Assumable Rate Conversion program, we can at least eliminate one of those uncertainties for business owners and commercial real estate investors by locking them into a long-term fixed rate of up to 20 years and potentially eliminating the interest rate risk for the life of the loan. So what is an Assumable Rate Conversion loan and why should you consider it? Assumable Rate Conversion, or ARC, is a long-term fixed rate financing program for commercial real estate loans. Under traditional commercial real estate lending for community banks, fixed interest rate terms are typically limited to 5 years, with the borrower needing to refinance upon each maturity at the then existing market rates. Given most commercial real estate loans are amortized over a 20 to 25 year period, this means the borrower may need to refinance his loan 3 to 4 times before the loan is eventually paid off. This places interest rate risk on the borrower, as if interest rates increase during that 5-year period, the loan payments will also increase when the loan is refinanced at a higher rate. This will also reduce cash flow for the property and diminish its return on investment. However, through our ARC program, Northwest Bank can provide long-term fixed rates to the borrower, which is then hedged by our correspondent bank, and we receive a floating rate. This results in a win for both sides, as the borrower eliminates their interest rate risk for the term of the loan, and the bank also avoids carrying the long-term interest rate exposure by receiving a floating rate. Furthermore, unlike traditional swap rate agreements that require complex accounting, documentation, and settlement requirements, the ARC program does not require any separate accounting, is documented through a simple addendum to the bank's promissory note, and the bank retains all servicing. Some other benefits of the ARC program include that it can be assumable, meaning if you sell the property, the person buying it could assume the loan balance as well and your interest rate that you had locked in. It could be transferred, so in another event where you sell it, you could potentially move your loan balance and that fixed interest rate to a property you already own or plan to acquire. There are forward rate commitments also, meaning that if you were doing a construction loan, you could lock into your rate at the time you close your construction financing, and then once the construction is complete, your fixed interest rate will go into advance, meaning you had one single close. Another benefit to the ARC program is the symmetrical prepayment provisions. While there is the potential that you could have a prepayment penalty if you decided to prepay and interest rates had decreased, we do find this to be unlikely, given that interest rates are still relatively low and that they are expected to increase moving forward. The benefit of the symmetrical prepayment provision in that instance is that if you were to prepay and the interest rates had increased, you could actually receive a premium. While there are benefits for this program in any market condition, to us, right now is the best time to move forward with this program. After cutting interest rates to near zero following the onset of COVID-19 in the United States in early 2020, the Federal Reserve has signaled that they are ready to begin increasing interest rates, meaning that rates are almost certainly going to be higher in the next 5 years. If you are looking to acquire or refinance a property today, skip the uncertainty of future interest rate concerns and use Northwest Bank and Trust Company's Assumable Rate Conversion program to lock into a long-term fixed rate for the life of the loan. If you would like to learn more about the Assumable Rate Conversion program and if it's the right option for you, please reach out to one of the members of the Northwest Bank commercial lending team, and we would be happy to discuss with you further.